This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Thursday, July 10th. Let's jump right into today's session. Bullish session overall. We're just missing that key ingredient of volume. But across the NYSE, we had 903 new highs versus 74 new lows, 60% advanced versus 35% declined, 22% are below the 50-day moving average and 37% below the 200-day. The Dow, the NASDAQ, and the S&P and the Russell all closed in positive territory. The last, I would say, 10, 15 minutes, there was a little bit of selling pressure, but pretty bullish session nonetheless. But I do want to preface that the volume on the SPY is just really, really tepid. And I want to talk about the SPY and the Qs in a second. But taking a quick look at the SPY volume, we ended the day at 53 million shares versus a falling daily average of 70 million shares. Looking across Mag 7 and the mega caps, Tesla was the strongest, up 4.7%. I believe they've scheduled their investor day for November, if I'm correct. But they were up the most. Amazon was down 0.13%, Microsoft down 0.4%, Meta down 0.75%. Apple was up 0.6%, Nvidia was also up 0.75%, and Google was up 0.57%. Looking at sectors, every sector was green except technology and communication services. That's not really good news. So communication services includes names like Meta, because they have WhatsApp and they consider that communications. Social media is communications, and they also include in communication services Google. To the upside, you have basic materials up almost 1%, consumer cyclical 0.89, real estate 0.67 on the hopes of a rate cut. Healthcare was up 0.65, industrials 0.64, energy 0.6, utilities up 0.6, and financials up 0.5%. I did want to share with everyone a long-term chart of not only the SPY, but also the equal weight Qs. The ticker symbol for that is QQEW. But let's start with the SPY. If you take a look at this chart, it encompasses all of the dot-com boom bust as well as the great financial crisis boom bust, and then where we are today. So it's a pretty long-term chart. But if you take a look at the recovery from the great financial crisis, you can see that we've lived in the upper part of that channel for most of that time. We spent a few months below it during some panic selling events, like I would say the obviously COVID lockdowns. But we're right there at the midpoint line right now. And the reason I want to show this is if we're able to inflate our way to the other end of this channel line, we're potentially going to go to 790 on the SPY. That would make folks like Tom Lee very right. The other chart I wanted to show was the equal weight Qs, right? Because the SPY and the Qs are very overweight the Mag 7. And the QQEW chart is from the great financial crisis low. And you can see a similar dynamic here on the equal weight Qs. We lived most of the time above that midpoint line. And since 2022, I should say, we have been living below the midpoint line. We're almost back to the midpoint line on the equal weight, not as strong as we are on the SPY.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you, they connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not your advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.